Hello, this is SeeWing Yee from the Yee Real Estate Network. Welcome. Today's podcast name is Exit Strategies for Real Estate Investors. Once again, this is SeeWing Yee from the Yee Real Estate Network. We are a real estate investment club, if you will, and we welcome our members who join our website for free so you can receive weekly free educational newsletters. Furthermore, you have the opportunity to receive practical, real information, real properties, opportunities. We do not charge for anything for you to be a member. We do not sell you expensive books and tapes or cost prohibitive, expensive seminars or to so-called boot camp, nothing. Okay, you learn from our platform for free. You execute on the transactions that are available to you from our network realtors that are working at different markets in the country. We profit when you buy the properties from our network and we receive referral fees from the selling realtor. Therefore, nothing out of your pocket. You will end up with a investment properties under your name, totally your control. The only uh, the only exception is that since you're buying through our network, we have a turnkey approach. We have a one-stop shop. That this means whatever property you purchase, whatever market you're purchasing, you will receive uh, you will receive services for free from our property managers, from our realtors, from our insurance agents, from our title companies, from the rehab team, whatever, everything is available for you on the ground where you can remotely, passively to buy properties regardless of your actual physical location. And then over time, you can buy one rental properties or multiple rental properties. You do not need to quit your full-time job, right? You can manage your portfolio from far away and continue to enjoy life as as important what is important to you. Okay, you do not need to become a full-time investor because our team from each market, our property managers and the whole team will manage your property for as long as you wish, forever, hopefully. All right. With that said, so let's go over the purpose and the strategy behind what I'm trying to help you with. Now, I know as a real estate investor, you make your money when you buy. However, before you execute on a one property closing or multiple property closing, given your goals, you have to really identify your real estate and financial goals. Why, number one, why you're buying real estate. Number two, what is your end goal? What meaning with it, with a portfolio of rental properties, hopefully, right, over time, right? It's a long-term game. It's a long game, just so you know. But you need to understand. You need to at least have some kind of a general idea of what is your exit strategies. What I mean by that exit strategy is your financial freedom goal, right? The exact date and time of hopefully that you're going to retire, whatever that means to you, financial independence, right? So whether it's 10 years away, 20 years away, that's the that's the typical scenario. So therefore, let's use a hypothetical situation. Let's say you want to retire with $5,000 of monthly real estate passive income, $5,000 cash flow. This $5,000 monthly cash flow for your financial freedom, quote unquote, goal may or may not be the sole source of retirement. Okay, but hypothetically speaking, I know I'm not gonna spend time to incorporate any kind of social security income you may get, or any kind of 401k retirement you may get, or any kind of pensions you can obtain from your from your regular job, whatever. I mean, just for the purpose of this presentation, let's, like I said, theoretically, hypothetically, just just use this benchmark. Okay, just uses $5,000 a monthly net cash flow. All right. So with that said, now that we have established a benchmark for you, let's look at a typical property you could purchase and how I can help you make some changes and adjustments over time. When you reach that 10-year retirement mark, or 15-year or 20 years, whatever it is, you can come close to the $5,000 monthly retirement income. Is that fair enough? All right, so with that in mind, uh, uh, without further ado, let's proceed. Now, this property, it could be anywhere, right? I mean, there are many different type of properties, but the assumptions I'm going to use is this is a single family home residential investing. In my opinion, just solely my opinion, over the years, when we work with thousands of real estate investors over many, many years to achieve their goals, uh, this is a single family home located in Cape Coral, Florida. Could be anywhere, right? Could be somewhere in Texas, could be somewhere in Florida, or could be somewhere in North Carolina, could be somewhere in Georgia, in a typical property of this price range where you can cash flow. All right, so this is your, let's, for example, you are buying this type of property. You want to buy new construction, whatever, right? So this is this is a like I said, this is a real numbers. Okay, it's just it's happening right now. So this is a very good practical example. So this house is 3 bedroom, 2 bath, approximately 1,600 square feet, located Cape Coral, Florida. So the purchase price is a brand new construction, new build. The purchase price is 315,000, as you can see, right? And you're putting 25% down payment, which is a total of $76,250. You're getting an investment loan at 25% down. Investment interest rate right now is around, uh, this is just a projection, 3.6%, right? So your monthly mortgage, as you can see, is $1,100. And the estimated rent you're getting is 2,100, right? 2,100 monthly gross rent before any deductions. All right, so let's go further. Your monthly taxes on this property is $353. Your property insurance is $83 a month. Your 8% property management fee, 8% of the rent, is approximately $160. And your potential monthly maintenance is $42 because it's a brand new construction. Most likely you're covered by warranties, at least for the first year on your, your basic stuff, right? But you do have a foundation warranty for like 5 years. So that's the value of buying a new construction. So here are the monthly debt obligation, 637, plus your monthly mortgage of 1,100, right? You offset that by which equal, okay, all right. You have debt obligations. Your mortgage is 1,100. Your other debt obligations, as I indicated here, 637. Total operating income of 1,357, right? And then you deduct that by the $2,100 monthly rent, equal, which is a very critical number right here, which is a monthly positive cash flow of $249. And I try to be as realistic as possible. Again, this is just a illustration, right? The actual figures may vary, obviously. So we put in a 5% vacancy factor, and we put in a 2% maintenance percentage on an annual basis. Uh, you know, we consider it pretty realistic, because like I said, this is a brand new house. So, and I'm not going to cover the financial indicators too much, but having said that, these numbers seems to meet our expectation. The financial indicators are within the framework of a good investment. Everything else being equal. The rent to value ratio is 0.07%, slightly less than 1% benchmark, which is very acceptable. And your capitalization rate is 5.2%. Anytime your capitalization rate is above 5%, we expect positive cash flow. All right. So I have another video that talks about the numerical formulas: rental value ratio, capitalization rate, cash on cash return, and total ROI, which is in this case 52%. The projection I have that I make is for the next 4 months, based on the very fast growing the Cape Coral market in Southwest Florida. We expect 10% appreciation at least for the next 12 to 24 months. That's our projection. These are, nobody have a crystal ball, but anyway, and also beyond, after 24 months from now, we expect the housing market to go back to normal, to go through a period of stabilization. I'm not going to go as far as give you some doom and gloom scenario where there could be a crash, correction, or bubble, whatever. There's too many talking heads out there that want to scare people, thinking the resale market will do all the bad things. But based on my data, I just don't see it. But I'm not going to go there. I don't want to spend too much time. I'm going to focus on your exit strategy. So, and then based on 10% appreciation projection, if you factor in the purchase price 315 multiplied by 10%, at the end of the first year, you have potentially receive, right, as you can see right here, $31,500. You can make $31,500 on paper profit. Of course, you're not selling the property, so this is just paper profit. Okay, you don't earn a real profit until you sell, and I don't want you to sell. Clearly, this is a buy and hold strategy. If your monthly cash flow is $249, then your annual cash flow is $2,988, which is almost $3,000, right? So it's a good investment. Okay. Now, do we not? Okay, think about it. $76,250. We're talking almost 80 grand out of your pocket to finance this purchase. So, a lot of people may not have this much money. Some of you can only afford to buy one rental, but I have, a number of investors that have $300, $400, even $500,000 cash to finance multiple properties of this type. So, okay, for the sake of discussion, for the sake of this podcast, you want to have a $5,000 monthly net income, right? Net after deductions. The problem is, right, you're thinking, how can I do that? I need almost 80 grand down payment to buy this $315,000 property, but I'm only getting monthly cash flow of $249. So that means I have to buy what, 20 properties in order to reach the $5,000 monthly net passive income, right? That's crazy. Okay, wait, there's more. It sounds like an infomercial. So if you buy 10 of these properties with almost $80,000 down payment per property, you need $800,000 of cash in order to buy 10 of this property. And if each property only give you $249 monthly net cash flow, your monthly net cash flow at the end of the day is only $2,490. That's only a half, right? It's only half of your desired goal of $5,000 income, and you already spend 800 grand to buy 10 properties. You barely reach 50% of your desired monthly retirement income. That's not going to work, right? Right. Okay. Just hear me out. Have an open mind, right? So, what do you think I'm going to do? How are you going to reach that level without spending $800,000 of your cash to finance 10 properties and still not even reaching half of your goal? So, What I'm going to ask you to do is to apply the pay down principle, right? So you're at least 10 years away from retirement. I'm going to assume that you're not going to need the cash flow of $250 per month, as in this case, right? I'm making that assumption. As you know, I'm making a lot of assumptions. So I'm going to ask you to, my recommended strategy is, since your retirement, so-called retirement is so far away, is since you do not really need the money, you do not really need the $250 a monthly net cash flow. Why don't you apply this monthly net cash flow each month, assuming all these numbers stays the same, right, from year to year, to pay down your principal mortgage. Now, some of you may not understand what I'm about to say. What I'm about to say is you can apply the monthly cash flow to pay the extra principal once a month. Now, have you heard that on a 30-year mortgage, most of it, the first two-thirds of the life of the loan is interest, right? You do not pay down the principal until the remaining one-third of the life of the 30-year amortized loan, right? Right. So have you heard if you pay your extra uh, one extra mortgage per year, you're going to reduce your 30-year mortgage to like 12 years, something like that, right? But I'm going to ask you to, instead of paying one extra mortgage per year, I'm going to ask you to pay one extra principal mortgage per month. You're going to pay one extra payment into the principal 12 times per year instead of once. So as a result, your 30 year, if you apply this principle and show the discipline and commitment to do this, you can pay off this 30-year mortgage in about 10 to 12 years. Let's say 10 years for the sake of our illustration. So in 10 years, this mortgage that you pay at 25% down payment and the bank is financing 75% loan to value, your original loan amount is 243,000. You're not going to wait for 30 years to pay off this loan. You're going to accelerate the cash flow, as I indicated, to pay off this house in 10 years. In 10 years, you have no, not only you have no more loan, this $243,750 is paid off, wiped out. Your monthly payment is also gone, right? No more debt. So what you do? You apply this $1,000 uh, uh, into the cash flow 250. So you have approximately $1,350, right? One, am I right? 1,000, yeah, around 1,000. So at the end of 10 year, you paid off your debt on this property. You have a monthly net cash flow with $1,350, right? So you have a goal of $5,000 of passive monthly retirement income through real estate. This initial purchase, which cost you a whopping $76,250 right here. So how many of these houses you need to buy in order to reach the 5,000? So 5,000 divided by 1,350, we're talking a little bit less than 4 properties, right? Uh, three and a half properties. Okay, okay. Let's say four properties. So all you need to do is buy 4 properties today at around $315,000, giving you, typically $2,100 monthly rent, whatever. So if you need $4,000 four properties, maybe less than 4, maybe 3.5 properties. Okay, 3.5 properties. Each property costs you 76,000. So multiply by 3.5, we're talking around $240,000 of cash, right? Am I right? So I don't want to, you know, overwhelm you with numbers. This is the conceptual numbers. It's not that difficult, right? So you need around 250,000, give or take, of cash to buy 3.5 properties in order to reach a $5,000 goal. So not not a lot of people have $250,000 cash laying around, but many people do, right? You'd be surprised. But I'm just making an assumption. So with only approximately $250,000, So he's the recap. Okay, the recap is all you need around $250,000. You don't have to buy four of these type of properties all at one time. You have to, you may take a year to do this, or maybe 2 years to have the necessary money or whatever to accumulate this 4 or 5 property portfolio, if you will. All right. So the recap is this: you know, you have the ability to adapt and adjust accordingly. Your cash flow that you're paying today, seems to be small, a couple $100 here and there, right? You know, if you have some additional strategies, if you go through the uh, 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 a network like us, we can assist you, right? We can design a financial plan that makes sense to you. This is just one of many ideas that's available to you. So all you need is 250 grand of cash to achieve $5,000 monthly net income. And yet, you know what's the good part about it is we're not even tapping into any of the equity. It's all based on the income scenario. The appreciation over time for the next 10, 20 years, we have not even discussed that. We're not talking about selling your property. We're not talking about tapping into your equity, do a refinance or line of credit, or selling your property and do a 1031. There's so many different strategies, but we're talking strictly about income. Okay, so making your money work hard. So this $5,000 of monthly passive income from 4 properties, you could get this money forever. I'm talking forever. You can hold this. This property can last a long time. It's brand new, for God's sake, right? Buy and hold for a long time. Uh, uh, this goose, these 4 goose will may lay the golden eggs. Multiple streams of income, golden eggs. So uh, there you go. That's all I have to say. There's really nothing more to say, and I think it's good strategy. I hope you think so too. So stay tuned. Please click to subscribe to our YouTube channel. We put out weekly newsletters, weekly videos in the YouTube channel to talk about many strategies. We talk about many different markets, many different strategies, many different kind of houses, cash flow appreciation markets in the best areas of the country. We have a team of network that can help you. So you can, regardless of your location, you can buy remotely, passively, and not needing to spend too much time so-called in managing your so-called portfolio. So furthermore, just find our website, yeerealestatenetwork.com, and put your email on the newsletter, and you will receive you will become a free member of our organization. Then you will receive weekly newsletters that are actionable. That means you can take action and buy property through the practical information and educational free learning you get from the newsletter weekly. Thank you so much. Hopefully everything is helped. This is SeeWing Yee from the New List Network. Thank you so much. Bye bye. Have a nice day.